So the number is coming off an admittedly low base after the COVID lockdown. But when you look under the hood in this data set, what is driving growth? And is it enough to really keep this pace of growth moving?
Right, Sri. I think, we were surprised with the 6.1. We also had 5.5% for this quarter. But looking back, we shouldn't have been surprised, because if you look at the data flow that has been coming through in other emerging market countries for 1Q, they've all been surprising on the upside, barring, let's say, Taiwan, Czech Republic, and South Africa. Brazil, Mexico, all the manufacturing exporters are delivering higher than expected growth, and on stronger export numbers, which is exactly where India's growth surprise came from, was on stronger exports. We had to the year for this quarter at 2%. We are now tracking 4%. So there is a sense of resilience, both in developed markets as well as emerging markets, that are underappreciated. And that's the reason as to why we're getting this pattern of upward surprises and growth. And an unintended consequence of that is that the upward surprise and the stickiness of core inflation.
Jahangir, private consumption, that was something of a missing link, wasn't it? Remains sluggish. What's that telling you? What can be done at a policy level, perhaps, to reignite that?
So I think, we need to step back and ask the question, should we be talking about stronger growth at this point in time? I think the world needs to cool down. The problem in global economy, including in India and elsewhere, except for perhaps China, which has just reopened, is that growth is slowing. It's not that it's not slowing. It is slowing much slower than what is required to tamp down inflation. And if that doesn't happen, then sooner or later the central banks will have to start rehiking or not pause or not delivering the easing that they should be doing. So I think that the consumption decline in India per se, which is the question that you asked, that reflects all of this tightness that has taken place. The lagged impact of the tightening of monetary conditions. That's one hand, and the other hand is the permanent scarring that has happened to household balance sheets that has come from the pandemic. And I think the combination of two of them is the one that's driving consumption slower. But I think, going back to the bigger point, I think we need the global economy to slow down. Otherwise, we won't be able to tame inflation.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.